Hey, welcome everybody. Happy Tuesday here in the stock market. Hope you got some time at lunch to join us. And let's see, make sure that we're on live. If somebody can help me out and just type anything in the chat so that I can make sure that that's working. But yeah, coming into today, it looks like we are down just a little bit. Scrolling the board, S&P 500 is about flat. Dow, NASDAQ, which of course is the one that I follow the most, down 0.25%. Also, Russell 2000, the small caps, are down 2%. Oil, surprising with oil, because I think we all just assumed that oil was going to be going up. And here we are with oil down slightly under $60. Even gold, silver, I mean, everything across the board, including the 10-year at 1.65. So pretty interesting day. I didn't look at Bitcoin. Bitcoin down minus 3% or so. So kind of a lull day, if you will, in the market. And so that can be good, depending on what you're doing and what your goals here are. Thanks, LD. Appreciate the chat, and good to see you as well. I can't test the chat myself. I have to have somebody type it in, so I appreciate that. But hey, if you're out with some money, stimulus money or whatever you've got, it could be a day to kind of pick at things. Myself, just as an update, I'm only buying on red days right now. I'm only buying on days when the stocks that I follow are down. I literally refuse to buy on an up day today, not today, just because I think that the market is super unsettled, and I'm not bearish about the economy. I'm not bearish about the stock market. I just think that right now, there's just a lot of uncertainty, and it's really hard to figure out which way this is going to go. I think we're going up over the long term, but I also think that there's going to be some opportunities throughout this year. Last year, we had very, very limited opportunities to buy the dip outside of the main event, right? Obviously, March was a phenomenal dip. But here into this year, I think we're just going to have some ebbs and flows, so I'm trying to stick to red days. Today, right now, is a semi-red day, if you will. So I thought I'd just come in and look at a few stocks and answer questions. And I'll kick off with LD since she helped me with the chat board. Lending Tree, which I know you've been watching for a little while, and so have I. It's an underrated ARK play, a long time ARK play. This is not... I've been with ARK. Oops. I'm on Lending Club. Lending Tree. Easy to remember with the tree thing there. But yeah, this is 5-year. Let's take a look at the 1 year. So they're heading back to almost, not quite that bad. They're heading back to the 200s, which would have been March 26th of 2020. This is a company that did have some struggles during the pandemic. You can see the negative EPS right now, but is expected to have a good year. And I think no matter who you look at, I wanted to see what TipRanks guys were saying about this. I'll check here real quick. So anyway, it's much more consumer lending than you would see with, like, let's just say straight mortgages. And yeah, you got the most recent guy saying sell at 225, but most of the folks after the most recent investors report has it in the 300. So it's interesting. You certainly can't argue the price. And let's see what the regular analysis is. I think, at this point, we're looking ahead to 2022. And so if they do hit this $5 EPS, you got that PE coming down to about 40. And just looking at sales, up 21% this year, up 20% projected for next year. So I think all of the signs are there that this one's got a strong future ahead of it. So I like the pick, LD. I do. I like that pick. And I started to say earlier about ARC. ARC's super popular now. I've been with them for a couple years, and they've had LendingTree in either their FinTech or their ARC-W for a long time. So there's something there with the ARC team that they're definitely excited about. And I think for me, being sort of a FinTech proponent, I just think that online lending is the way to go. And if you do random searches on the internet, you will see the LendingTree is right up there with the best of them. So it's a good pick. All right, big fan of TJT, Target. Yep. So Hen Hatch, talking about Target. Let's see what Target's doing today. I haven't looked at that stock in a while. I think it's a great stock though, from a long-term perspective. Our family does a lot of Target shopping. It looks like it's, been up quite a bit in the past year, 90, almost doubled up. Let's see recent activity, year to date. So the high, about 199 on January 12th. This looked like a really good opportunity here on the March 4th broader meltdown. Now you're up to 190. Take a look at, see what some of the analysts are projecting. But I think Target, the bottom line with anything retail, it's very unlikely that a retail store stock goes up fast. It just doesn't happen unless you catch it on bad news. But as a long-term investment, you got 3 buys. Let's see, 20 days ago. Sorry, I like to look at this column here. With all the dates, because I only like to do the freshest ones. And you got buys across the board into the 200s. You're at 190 today. So I would agree with Target being one where there's, it's that balance you're looking for with a great stock like Target, right? It's like, it's going to go up over the next 5 years, 2 years. It doesn't matter. Like, it's a good one. So it's not a debate about, is Target a buy? Is Target a good investment? What you'll see oftentimes on my channel is like, hey, we know that Apple, Facebook, whatever, Target, they're good stocks. That's not the debate. The debate is today's price a good time to enter the stock and or add to your position if you're still bullish on it? And I think with Target, hopefully, you had an opportunity to get in earlier in March, because that was definitely a target price that came in there. But the long term's fine. And you can easily make an argument for Target that you're just buying, averaging across the board for the year. But it looks like if we saw any more weakness today, if you got it just dipped to 189 under 190, I think that's a perfect place to get in if you're in for the long term. All right, your thought, let's see, Akshay, hopefully I'm saying it right, GHVI. Guess I'm just going to jump into questions and I'll tell you about my stocks on sale, if you will, are the ones that I'm watching. So GHVI, I'm not familiar with it. It looks like it's Gores Holdings. Looks like an IPO or a SPAC that came out on the 21st. Real estate tech company, covered in Motley Fool. So I do not have a subscription to Motley Fool, but I will say that I read all their free articles on stocks that I own. So I trust their opinion. 3D mapping technology. Company Matterport. Okay, so yeah, I've heard about this one through Meet Kevin, and I think he's really big on it. Just going to do a quick scan. Take really impressive 3D maps inside of buildings. They are a company behind the software, 250,000 customers in 150 countries. So these are strong points, obviously. The international presence, I think, is great. So as a speculation play at this price, why not? You know, assuming you're not dumping your whole life savings into it. You know, it's a software type company. So, you know, coming out of the gate, whenever this turns over, I don't know, is there a date on when this is going to turn over? Let's check on this one, see if they put a date on it. Company will merge, deal. The deal is set to close in the second quarter of 2021. Okay, so what you're looking at there, just to let you know, is that would be May, June, or July of this year, right? April, May, June. So could be not too far away, but it also could be as late as June. And so if I'm in a similar situation, you're talking about something different with GHVI, but I'm in the same situation with BFT, which is eventually going to be in PaySafe. And I'll tell you, with BFT, it's just kind of existing right now, ironically at almost the same price. So just know if you invest in it, if they're talking about the second quarter into 2021, you could just be existing for a little while. But if you've done your research and it's got a couple, you know, just scanning articles, it's got some people who are big fans of it, including Meet Kevin, who, you know, I like to watch his stock research. He invests slightly differently than I do, but I think that he does a great job of talking about stocks. So yeah, GHVI, I'm going to add that one to my watch list, and why not at that price? $14.90. You had a high of $24.56. All right, done. Okay, SFT. Real quick, SFT. Let's see what's going on there. Shift Technologies. Is this the used car sales? Let me read about it real quick. End-to-end for buying and selling used cars. So this market, I think that this market is a tough one in the short term because, you know, I think that the boom was last year, right? As far as buying on your phone, have it delivered to your house. And now that we don't have as much COVID concerns, I think the pressures on companies like Shift Technologies and Carvana and all the others, I think that there's a lot of pressure on them to prove that the model works. So if it was me, and I have not researched a lot about Shift, but if it was me and, you know, you feel really good about that model of how people are buying, then I would really hold out for a low price on Shift and then hold for the long term. It looks like on, you know, the lowest it got was 768 on March 8th as far as recent dips. So pick your spots if you believe in it. I haven't read enough to tell you if I'm a believer or not, but you know, in the $7 range, if you believe it, 100 shares off to the side may not be a bad play. I'm just not sure that they're going to see a ton of growth, not just them, but Carvana and people like them. I'm not sure how the growth is going to go this year. It's just, you know, my opinion. All right. LD says VFF. So let's look at that one. Sounds like an ETF. Nope. Village Farms International. All right. How long's this one been out? For a while, 2019. And it's held strong. Got an EPS. Greenhouse grown tomatoes. I'm reading this little thing here, which doesn't show up well on the screen. bell peppers and cucumbers. It operates through produce business, energy business, and cannabis business. Wow, it's got a lot of stuff going on. Okay. Let's take a look. I was going to say it's probably too small to get any analysts' opinions, but right off the bat, just looking at these metrics, you've got 19-cent EPS, so you're in a decent place, assuming that they're going to continue to grow their earnings. And I'm going to type it into TipRanks and see what happens. I'm not sure if it's got enough coverage. Okay, actually you do. So 7 days ago, 7 days ago, 6 days ago, pretty strong, I would say, by these standards. I use TipRanks all the time, and you've got several 4 or 5 star analysts coming in the $18 to $20 range. So I don't know, might be something there. I would definitely get on their website and go to the investor relations. Since they've been around so long, that's actually good news, because you can kind of get a feel. If they started in 2019, they likely have multiple investing reports that you can review. But I think you got some positive signs out of the 2 minutes that I spent on the stock. So very interesting one, and I'll watch that too and see if I can do. I like getting these ideas from you guys because I can watch those stocks and then I'll go back and try to do some more research, especially for LD, who's a longtime watcher. So yeah, good idea there. All right, long-term thoughts on Axon. Let's see. Let's take a look at what we got. This is for Russ. Axon Enterprises. I believe this is a defense play, right? With drones, and I think they make all kinds of, what's the word I'm looking for? Tasers. Here we go. Tasers. I think that's what they're best known for. But they also have this body camera. I know you guys can barely see it, but let me see if I can squish it in. The screen doesn't modify very well. But they also have these body cameras, and then they do the software for it too, which has been a big play for them. Obviously, public safety has been an interesting road over the past few months. Stocks made a lot of progress, the high of 203, so you're at a significant dip of 140, which I like. EPS, minus 3 cents. Let's take a look at where analysts project that they will go. Now they're saying a year ago was $1.81. That wasn't showing on Yahoo, but if they hit $1.43 this year, you're in the neighborhood of 100 for a PE, and then next year at 187. So it would come down a little bit. 12% and 15% revenue estimate for growth. So 681 million to 764 to 885. So it's growing. It's not growing at an insane rate, but it's headed in the right direction. I would be picky on your price on this, just very quickly on what I'm seeing here. See what other analysts are saying. Not a ton of updates 25 days ago across the board. You've got a lot of 200s in here. So, you're down 2.5% today. The outlook from a growth perspective is double digits, but it's low double digits. I guess my take on it is figure out where the growth is going to be in 2022. If you're lucky on a company like this, you're going to see that government and security spending would increase coming out of COVID, in particular because of all the problems that the police have had from a PR perspective. not to mention the White House thing and all that. So security is top of mind. So I get your feeling on that one. And long term, this 141 is probably not a bad price considering analysts are projecting in the 200s. I would just get picky right now, same way I led off with this live stream. Just get real picky on the price. So hopefully that helps you a little bit, Russ. All right, LD like shift, extremely cheap compared to Carvana. Vroom is quite lacking. SFT seems smarter to her. So LD, I know, has studied those companies in way more detail than me, so that's good. Opinion on Shopify long-term and Visa. Visa, yeah, I'm going to say real quick, I'll get into Shopify for a second, but I'm going to tell you guys this right now. On Visa and the Department of Justice, inquiry on the debit card fee structure, I wouldn't worry about it. Okay, that's the bottom line that I'm going to say. So anytime, and you can go back in history and you can do any company ever investigated by the Department of Justice. It takes forever for starters, and then secondarily, for a US-based company like Visa, it's very unlikely that they're going to get much more than a fine. So I would not let the DOJ headlines detract you from Visa. It doesn't mean that you shouldn't be picky still with your price entry. However, don't overlook the key bull story for Visa right now, and that is the return of travel. I think we'll see international travel is probably going to be pretty spotty in 2021 from a tourism standpoint, but inter-country or whatever, cross-border travel within countries, I think is going to be just fine. In fact, if you didn't see the TSA reports on traffic, like it's way up. It's way up. So I don't know how many folks are going to go from, say, Ohio, where I live, to Germany coming off of COVID. But I think the number of people that go from Ohio to California, Florida, etc. is going to be incredible. And that's exactly the type of customers that use Visa. Then you go over to Europe. And with Europe, assuming the borders are open, which they're having a little flare up right now, people who travel, say, from France to Germany, or France to Spain, or however you want to do it, those are cross-border transactions. And for people who live within Europe, that is actually a fairly common activity, much in the same way that we go from state to state in the United States. So I just want to call that out on Visa, because I did have a few people ask me, am I worried about Visa? I'm not worried. I think I've been saying for a while, if we have a large market drop off, if you will, if you can get Visa under 200 and you are feeling good, you can let it sit for 5 years. I think it's a fantastic, safer investment. It's not going to go to $600. It's not going to, triple your money in a year. But for me, I run kind of a barbell portfolio, and Visa is the anchor on my conservative side, if you will. Plus, you get the dividend. So look for 200. I don't know if you'll see it. Let's see year to date. We did have a 200 back here in January. Here's your, they were rolling at 220. Then the DOJ comes out with their jackass press release, and it drops to 206, and you see that, we're already bouncing off 206, and frankly, today is a down day of minus 0.36% on the NASDAQ, and Visa's doing just fine. Barely head above water, but certainly not down like some other cards are. Now, the original question was about Shopify. I do not own Shopify. I'm not against Shopify. I think it is pretty expensive. However, they have been expensive for 15 months, 18 months, and the price keeps going up. So it's really hard for me to keep saying it's expensive because they're winning the scoreboard. They continue to go up. But today, like things that I don't like, generally speaking, is PE ratios in the 400s. However, you have this, if I can scroll over, they've hit far and above every earnings, over the past several months. And it's just hard to argue their performance. You can see, I look at this little chart, just eyeball it, right? You want revenue to go up, obviously, which it has, but you also want earnings to go up, which is the blue. And outside of 2019, where they seemingly took a step back, 2020 earnings were great. Let's see what the analysts are saying. Current year, sorry, let me scroll over so you can see everything. Year ago, EPS, $4. This year, $4. So a little bit flat here in 21. Then they start to get back on track for 22 as far as earnings go. But revenue, you're in that plus 30%. So long term with Shopify, I mean, I think that you probably win, right? The catch is that the short term could be a little choppy just because of the way, and you see this right here, you've got a decent chunk of holds right now. So 1 month ago and up, this is TipRanks with the best performing analysts. You've got 1, 2, 3, 4, 5, 6 holds and 3 buys. Now, hold is not bad. Hold means if you have the stock already, they're specifically telling you do not sell it because it is a good long-term investment. A buy insinuates that the price in the months ahead could very well go up, or that particular analyst thinks that the price will go up. So Shopify in the long term, which was Daniel's original question, yes. It's proven me wrong time and time again. Would I prefer that you got it at $900 or less? Yeah, but that's not where Shopify is trading right now. And a guy like me who's relatively fundamental in his analysis, that waiting for that game would have cost you a ton of months. So if you're in, hold it. Long term looks good. All right. LD. Yeah, Kevin is clickbaity. Yeah, he is. I mean, he's built an empire. I'll give it to him. Okay, Ola from China. Hello. Please review EHTH and Workhorse. Okay, let's take a look here. Oops. EHTH. So EHealth, this one has been struggling. I'm familiar with this one. I've actually covered this before. So EHealth has opportunity. Their problem was they really screwed up last year. So they were supposed to have a big year in Social Security, which is American benefits that you get when you get older. And there's a Medicare portion to that. And a lot of people in this industry bank on the Medicare enrollment period to drive revenue. So it's, let me see if I can slide this. Yep. So here's where eHealth really kind of screwed up. They were doing great. They were beating estimates, which of course these look a little low. But over here in Q4, this is the Medicare enrollment period. And this is when the company, all intents and purposes, was supposed to shine through. And they literally dropped the ball. They literally did not perform as expected. Their Medicare signups were crap. And I was absolutely shocked because now they're going to go through 3 more quarters like this, where the estimates are relatively low because it's not an enrollment period. So unfortunately, eHealth, you either have to watch the company and average down, okay, or you pack it up and move on to the next stock. Now, on the bright side with eHealth, it is growing. So you have, this is revenue down here. 17% growth projected this year. So 582 to 685 to 847. That's exactly what you want to see. On year ago EPS, they are expected to grow very slightly and then take off technically in 2022. So there is good fortune in the future. It's just terribly unfortunate that they blew it in the fourth quarter, because this was a stock that was up here, had the potential with good earnings to go to 200, right? And instead they flopped on the reports and they got dinked twice. So if anything, eHealth, it could be a good time to buy or average down a little bit, but it does look like, unfortunately, it's going to be a 2022 rebound on that one. As far as Workhorse goes, I'm not a huge EV player, as many of you know. I know they suffered the contract loss for the Postal Service. However, what I do like about Workhorse is, unlike some of these plays, they are actually making a couple dollars. You can see the, these revenue and earnings charts are very, very small. You're talking about $70 million. But, the long term, they need more contracts. That's the only game that you should look at with this company. I'll see what analysts are thinking. Yeah, see, here's your problem. They're going to go back, if things work out the way they're projecting, they're going to go back down to a negative EPS for the next 2 years, likely because you see these sales growth numbers, which are very strong, likely because they are going to incur expenses of ramping up their production. But this is kind of interesting. Where's our average estimate? So this says plus 7,000, but actually year ago sales and average estimate is flat to down, and then next year takes off. Let's see what some of these guys say, because they're going to follow Workhorse better than me. I don't mind it as a 1% kind of play. You got holds, pretty quiet over here for Workhorse. Not a ton of positive signals, I would say. So my take right this second on Workhorse is follow the news. Two things are going to happen, okay? Either they're not going to have news because they're not signing contracts and they're going to be flat to down this year and the stock will go down more, right? Or the good news would be, just like the Postal Service, the press release comes out that, hey, we might have a deal with these guys. The stock will inevitably go up on that news. Can they close the contract this time, right? It won't be for the Postal Service, but let's just pretend it's for Amazon, just to pick one. That would be huge, but can they close it? Last time they didn't close it, and they screwed stockholders by coming out and touting the Postal Service, and then they didn't land the stinking Postal Service. So that's where you are at with Workhorse. It's a news feed stock right now. You need more positive news. That's what I would say about that. All right, Boeing. Gosh, Boeing has had so many opportunities over the past year to buy. It's a stock that I've watched and considered several times. Now you're up to 244 already. When I really liked when it fell back underneath 200, as a time to get in, but I do believe they had a press release that said that airplane orders were up from somebody, not sure who. But the key here is the potential in the future. So really today means nothing. Ideally, they get to flat on an EPS for 2021. So 2021's flat, and zero is good news at that level. Then next year, it's either going to be $5 or $10, right? So at $10, if you get the high estimate, then the PE forward is 24. If it's less than that, it gets into the 50s. I don't know what their dividend situation is, but this is a very cyclical industry. So 38% sales increase for this year gets them to par on an earnings basis, but then next year it's sub 10%. So I don't know. I guess my take is 200's a lot better for the amount of time that you're going to have to hold it, right? My goal is always to make a quick return in 90 some days, 90 to 180 days. I want to make something out of my stock, even though it's a long-term hold, right? So just PayPal, Visa, we talked about Visa, right? I want to buy it at a time where I know that 90 to 180 days from now, I will make a return on my investment. And that is the ideal entry point. With Boeing, I'm not sure that 240 is that point. I would still like it under 200. It may not be Boeing that gets you there. It may be the stock market going down would give you that opportunity. So just a thought. All right, and yes, Florian, it will eventually go to 300. If I had to guess, looking at those numbers, that's might be a 2022 goal. Eli just touched the 50-day moving average. Yeah, I'm going to go to top. So in Ohio, it's it's not like Florida, so it takes a while to get warmer here, but it's warm today. So I think I'll have to go out to Topgolf. I'm not a mega golfer, but Topgolf, you don't have to be a golfer. You just go and drink a beer and have fun and whatnot. So if you guys don't know, Eli, Callaway Golf, the big catch, as I've already mentioned, is that they bought Topgolf last year. And somewhere, I forget when I first talked about it on my channel, but it was somewhere in this like $15 to $20 mark. Now you're at 27. It'll be interesting to watch Callaway's earnings report, say July. Okay, let them get Q1 and Q2 in, and Q2 will have a lot of Topgolf in it, and then we can start to project on the future. Because right now, it's going to be a murky story. In fact, some of this doesn't even make sense. Oh, but they bought Topgolf, that's why. 67 cents last year, negative this year, but they're going to have a ton of expenses with Topgolf. However, the revenue plus 73% this year, that makes sense because of COVID, plus the addition of Topgolf, and then next year plus 20%, and that will probably go up. So I don't have any problem with Callaway as a long-term hold. Just don't buy it for a short-term turnaround. I think Topgolf is one of the great destinations in America for both families, date nights, young people. It's an outdoor Dave & Buster's or whatever. And I think that they do a really good job. I've been a customer several times. So I like it for the long term. I don't know at $27 what's left in the short term. So for me, I would be holding out a little bit. All right. Sell Dropbox. Yeah. Let's look at Dropbox. So that's Jeremy is a big one. I don't know him, by the way. I say these people's names like I know them. I don't know them. They don't know me. Dropbox, I got to give some credit because when I first saw this on Financial Education, I was like, oh, really? Like, this is your big next stock? Not sure if I feel the same way. However, it has performed. If you are up at $28, you still might have some life in there. If it got to $1.27 EPS, you might sneak in, into the 30s or 40s. But the sales growth isn't hot at all. For a person who's looking for mega growth, this isn't, to me, this doesn't say a lot. 1.91 billion to 2.11 billion. It doesn't look like there's a ton left. Let's see what the TipRanks guys are saying. They have moderate buy, but really wacky signals, right? So here's a month ago. They're doing buys without price targets. Here's a 31, a 28. Then you have a sell. They would need an acquisition. And the other side of Dropbox that is an X factor that could work out well for a lot of people holding the stock is potential buyout, right? Or buying the company. I don't know how you invest and hope something gets bought out. I don't think that's a very good strategy. But yeah, if it was me, LD, and you were up, say, closer to 50%, on Dropbox or anywhere thereabouts, I would consider it. I don't think the stock tanks, but I'm just not super pumped about the growth story that I see there in a super competitive market. And as everyone knows, the free options out there for some things, whether it's Google Drive or anything like it, it's really hard to compete with that, man. It's really hard to compete. All right. Let's see. Adobe. LD, you are actually answering more questions than me, which is great. But there was one on Rose on Adobe. So I like Adobe as a company. Let's see where they are from, like, would you buy it today kind of thing. All right, so I like to look out a year, and you got Adobe coming off of, they're not at their high point, which is great. Sorry, had something else come in here. We've got a PE of 42, so it's really, let me see something else. This one, the good news about Adobe is the company has been in business for so long. This is like Microsoft and Apple. You can literally project the future relatively accurately on these companies because it just takes so much to move. So what I'm looking at here is where their PE has been over the course of time. So if you are at 40 right now, historically, this is annual, historically, it's been in the 50s, so lower than normal. The forward PE, though, is a little bit higher than we've seen in the past, but it looks, I don't know, relatively solid. PEG ratio, very slightly higher. I guess my take on this would be, today's a green day. I wouldn't buy it on a green day. It's hard with their earnings coming out today because you don't have much of a choice. But I don't know how you argue Adobe for a long-term stock. I would just be picky, and because if they miss by like a penny, which is irrelevant in the broader scheme of things, people will dump it. What this price action today of plus 2% is almost all because it's earnings day. And so some people who play the earnings day game, they buy in, and then once they've achieved what they're looking for, they sell out. So that's why you see a ton of stocks that go up, and then after earnings, despite good earnings, they go down because everybody sort of like used them for what they wanted, then they leave and slowly it bounces back. So I guess just be picky like everything else. CALD. Let's see. What do you think about Knox? Knox. That's a new one for me, so let's check it out. KNOX. Might not be here. Let me see that again. NNOX. Gotcha. Wrong one. Nano Imaging. How long has this company been around? Since August of last year. So IPOS back, something like that. They are in Israel. Nano X Imaging engages in developing X-ray source technology for medical in the United States. And it's a novel digital microelectric mechanical blah, 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 whatever that is. Okay, so without knowing exactly how their X-ray stuff, outperforms whatever we have in the world today, it looks like, let's just check on sales. This is a small company, so we don't have a ton of insights. May not be able to help you with this one. Let's see if anyone's following it over here. If I knew more about it, I'd just tell you what I think. There we go. All right, so in the past 30 days, you've got a couple top analysts come in on it. One says hold, and the other 1 month ago says buy. So that's all I got. Let's see if there's any good news on this company. All right, so you got a Motley Fool mention. This is a Motley Fool article that's posted on the NASDAQ, and 3 diagnostic stocks, Nano X Imaging, cost of product, demand for an increase. Okay, so they're saying is banking on with its cheap X-ray machines, whereas normal X-ray devices require high upfront costs and ongoing maintenance. Nano X product works on a subscription model. Okay, healthcare providers pay on a per scan, keeping capital expenditures low and scaling profitability. All right, well, and then they finish off with company will have a competitive advantage over traditional X-ray manufacturers. They can't deploy their products as cheaply or flexibly in comparison. So with that, and knowing that I typically trust Motley Fool, certainly from a research standpoint, then you might have a play here. I think it's still speculative, just to be clear. You could probably get away with a small company like this. You could probably get away with continuing to follow the headlines. You're not going to know how their sales are going, though. You might get something in, when's the next earnings report? They don't have one yet. Okay, so assuming their next earnings report is going to be in April or May after Q1, I would be interested to see what that says, because it's all about sales, right? You're selling to doctors, and you're trying to save them money on X-ray machines. So until you make the sale, unlike a consumer item, you have to sell to professionals. I don't know what that world looks like coming out of COVID. I would anticipate that April through December is going to be better because of the vaccines. So I think you have more time. I think you have more time to kick the tires, learn everything you can, and follow the news on it. All right. How about Bomb? This is Nick, Bomb N. Take a look. You guys got a lot of them I don't know today. Boston, Omaha. Definitely don't know this one. Been around at least 5 years. You're hitting, let's see what it does first. Together, outdoor billboard advertising. Okay. Also involved in the surety insurance and related brokerage. It operated 3,000 billboards, advertising faces. So I can see billboard advertising being a hell of a lot more successful this year than it was last year because there's actually cars on the road. So that part makes sense to me. From a purely fundamental standpoint, no EPS last year, about minus 61 cents. And then in this is 2020. They haven't reported yet on their full fiscal year. So if they hit 39 cents, you're in, I have to break out the calculator on that, $38 divided by 39 cents. So you're at about 100 PE today. From a revenue standpoint, you're growing double digits. And this is, you're going to have to go back on statistics on this one. Looks like they have yet to have a profitable year, which is kind of sort of good news because you have that opportunity now. I would put this in the same boat as the X-ray. I think like the bull case is there. If you know more than the average person about what happens here, maybe you have the insights to buy it. I would be inclined to let it ride for a little bit and see where it lands. It's been as high as 47. I don't know what's left at 38. I really don't. But I can tell you that there's a little bit of speculation to the stock. And so the good news on that, anything that's speculation right now, whether it's, Boston billboards or the X-ray company, anything that's speculation is going to get a big haircut on a super negative day. And that's okay because that's your opportunity to get in. So I have stocks like Palantir, who else? Unity Software, Enphase, a lot of speculation in those three names. And I've sat and watched them in this year when we've had some ups and downs. They get chopped. They get absolutely slaughtered on the days that the market goes down. And that's the better time to buy in. And I believe in those three companies because of the research I did. So it's a lot easier for me to buy at a discount for them. So hopefully that makes sense. All right, guys, it looks like I answered all the questions. I'm going to answer the title question, are stocks on sale right now? I would say some of them are. And I would encourage you, even if you don't believe in fundamental analysis, I would encourage you to use it as a bookmark for yourself to figure out what kind of deals are out there. Just for kicks, I was looking at Apple stock today because I might have an Apple update soon. And it's not as overpriced as it was last year. You can literally get into Apple. Today was around 120, something like that. See where we're at, 122. And the projections on their EPS and stuff look like it was in about the 40s on a forward PE, but Apple was running way higher than that last year during the pandemic. So it might, that's just one example of stocks that are slowly coming back to reality, that are fundamentally good plays. And if anything else, even if you like to buy GameStop and AMC and stuff like that to have fun, just balance out the other side, right? For me, that balance is Visa, it's PayPal, things like that. I got TJX. That's the barbell side for safety. And then the other side, I bought Enphase, Unity, whatever. You might have some other names. Just keep a balance, because if we do have, let's just say, a 4%, 5% correction over the next 3 to 5 months, then the ones that are on the riskier prospect side, they're going to get nailed. But the ones that have strong fundamentals are either going to remain mostly flat, or you're going to see the money come from the prospect side into the for sure names, because everyone will be getting freaked out, and the for sure names will go up on that. So it's just something to think about. That's how I'm looking at things. Very hard to predict the future, but you can play in both worlds. if you do it smart. So hope that helps. Thanks everybody for joining, and we'll see you on the next one.